as we have known previously, this course we have altogether 5 modules. We have learned the first 2 modules already. Module 1 we talk about stock, and Module 2 we talk about bond. Today we'll start Module 3. In Module 3 we will talk about security markets. In general, the questions in this module, we have 2. First, what are the major global security markets? And second question, how are their situations? In this module, we will introduce the global security markets, primarily focus on stock market and bond market. We will learn how to describe the market movements, that means the market index. And then we will learn how to analyze the return and risk in different markets. And we can compare with different markets in terms of price movement, return, and risk. Similarly as the previous 2 models, we also have lots of topics in this module. The first 4 topics we will learn in this module are the security markets in China and Asia. Then we will learn the security markets in America. Next, Europe, and then Middle East and Africa. Topic 1, we will talk about the security markets in Asia. The question in this topic is, what are the major security markets in China? Okay, in order to understand the security markets in Asia, let's start from China. And for China, we also separate our contents into several parts. We start this topic from a topic case first. Let's look at the Shanghai Stock Exchange. This is a summary about the Shanghai Stock Exchange. Overall, in Shanghai Stock Exchange, we have how many stocks do we have? By this date, 2021, June 25th, we have altogether 1,969 stocks. These are the total number of stocks in Shanghai Stock Exchange. How many shares? We have totally 43,956 100 million shares. Please be aware the unit here is 100 million. Outstanding shares. Outstanding shares means shares are tradable in market. Is a part of them. It is 38,735 100 millions. Total value. Here we have the unit is 100 million RMB. This is the total market value. Well, this is the total value outstanding, means the total value of stock outstanding, which is 412,336 100 million RMB. In Shanghai Stock Exchange, we have primarily 2 boards. The first board we usually use is the main board, and then we have the star board. In main board, how many stocks do we have? We have 1,671 stocks. And for the star board, we have 298 stocks. Of course, this is by this date. So later we can update the number. This table compares the situation between Shanghai Stock Exchange and Shenzhen Stock Exchange. Here we have the Shanghai Stock Exchange. Here we have the Shenzhen Stock Exchange. And this is the comparison between them. In order to compare the situations between Shanghai Stock Exchange and Shenzhen Stock Exchange, we have many different items. Let's look at the first item, number of stocks. Shanghai, we have 1,969, while Shenzhen, we have 2,284. So, Shanghai has less stocks. In terms of total shares, the unit here is 100 million RMB. Shanghai is 43,000 more, while Shenzhen, we have 22,000 more. In this way, Shanghai is almost 2 times of Shenzhen. That means more shares. So what do we mean by we have more shares in Shanghai? That means the stocks listed in Shanghai usually issue more shares than Shenzhen. Then we can quickly calculate the shares per stock. Here the unit is 100 million as well. In Shanghai we have 22 more, while Shenzhen we have 9 more. So in this way, every stock listed in Shanghai, they issue usually more than twice of the shares than Shenzhen. So for now, I think you already have a rough idea, an image about the stocks listed in Shanghai and Shenzhen. In Shenzhen side, we have more stocks. In Shanghai side, we have less stocks. However, the stocks listed in Shanghai, they usually issue more shares. Okay. For shares outstandings, it is almost the same ratio. Okay. And then we can compare the percentage of shares outstanding versus total shares. In Shanghai, the ratio is 88%, while in Shenzhen, it is 81%. Shanghai has more shares outstanding. This is from another side, shares non-outstanding. Next, let's compare the total values. Although we have less stocks in Shanghai, however, in Shanghai we have more total values, almost 2 times to Shenzhen. Here Shanghai is 492,714. Okay, the unit here is 100 million RMB. That means the total market value in Shanghai is about 1.8 times compared to Shenzhen. Then we look at the total value outstanding. The unit is the same. In Shanghai side, it is almost 2 times compared to Shenzhen. Value outstanding. In Shanghai, it is 83%, while in Shenzhen, it is 77%. That means for the stocks listed in Shanghai, there were a higher percentage of the shares outstanding compared to Shenzhen. Okay. So from this table, we can quickly have an idea about the stocks listed in Shanghai and Shenzhen. Let me summarize again. Shenzhen has more shares. However, stocks listed in Shanghai, they have more shares and they have bigger market value. And they have higher ratio of outstanding shares. I believe this helps you understand the difference between Shanghai Stock Exchange and Shenzhen Stock Exchange. Okay, in order to have the up-to-date number for Shanghai Stock Exchange, we can run this command to have the newest data. So let's try it. We copy this command to Jupyter Notebook here. Then we press Shift plus Enter to execute this Python command. Okay, this is pretty quick. Now let's look at here. This is Shanghai Stock Exchange. By today, in Shanghai, we have 2,137 shares. So how many stocks do we have in Shanghai? This is the most recent number, more than 2,000. And how many do we have in main board? It's 1,700. How many do we have in star board in Shanghai? We have 437. This is the newest information for the stocks in Shanghai Stock Exchange. Let's back to the slides. Okay, we have done the exercise. Yeah. Then let's move to next topic. What are the major security markets in Asia? Okay, we will still start from China. This table describes the major security markets in Asia, while the data is by end of 2018. The biggest stock market in Asia is the Tokyo Stock Exchange in Japan. Its market share in Asia is more than 20%. The second largest one is Shanghai Stock Exchange in China. Its market share in Asia is more than 18%. The third largest one is Shenzhen Stock Exchange, also in China. Its market share is more than 14%. And the fourth largest one is China Hong Kong. Its market share is 13%. And the fifth is Bombay, now we call Mumbai, in India. Its market share is more than 6%. And next one is also in India. The second largest security market in Asia is called National Stock Exchange. Its market share is about 6% as well. And the seventh is Korea. It's Korea. And then is Australia. So this is not only the security markets in Asia, but also Asia Pacific area, right? And the ninth one is China, Taiwan. Its market share is 3%. Then Singapore. Although Singapore is a very small country, but its security market is not that small. Its market share in Asia is 2.6%. Compared to the total area in Singapore, its stock market is big, relatively, of course. Then we have Kuala Lumpur in Malaysia, Thailand, Indonesia, Philippines, New Zealand. Also, we have Ho Chi Minh City Stock Exchange. Previously, we called it Saigon, Kazakhstan, and Kuala Lumpur. So let's do a quick statistics. This is pretty interesting. If we plus Shanghai Stock Exchange, Shenzhen Stock Exchange, and Hong Kong Stock Exchange, and Taiwan Stock Exchange, the Great China, in terms of security market size, is, this is 32.6, 45.7, 48.8. It's roughly about 48% of Asian market share. It's really number one. So in this way, China is very powerful in terms of security markets in Asia. Then let's look at American continent. Of course, we know that American continents, we have North America and we have South America. Okay. Let's look at the situation in America. For the security markets in America, we have number one, New York Stock Exchange. Its market share in America is, wow, it's more than 63%. It's really big. And next is NASDAQ. Its market share in America is more than 25%. So these two together is 89.5%. 89%. So these two market share is 89% of all the security markets in America. And the third one, we have Toronto, and Brazil, Mexico, San Diego in Chile, Colombia, Argentina, Peru, Bermuda. So this is the situation in America. Next is Europe. The largest security markets in European countries is the Euronext in Holland. Its market share in Europe is more than 24%. The second largest one is the London Stock Exchange. We usually call it LSE in United Kingdom. Its market share in Europe is more than 24%. It's very close to the first one, Euronext. And the third one is actually the Frankfurt Stock Exchange in Germany. Market share is more than 12%. The Swiss Stock Exchange in Switzerland, market share is more than 10%. And then we have the OMX in Sweden. We have the Spain and Italy, Russia, Oslo in Norway, Ireland, Austria, Luxembourg, and Greece, Hungary, Slovenia, Malta, and Cyprus. This is the situation of security markets in Europe. Next, let's look at Middle East and Africa. This is the situation of security markets in Middle East and Africa. The largest security markets in this area is, this is by end of 2018, is the Johannesburg Stock Exchange in South Africa. Its market share is about 35%. And the second one is Saudi Arabia Stock Exchange. Its market share is roughly about 20%. But nowadays, the order, I believe, is already reversed. Number one might be the Saudi Arabia Stock Exchange, because of a famous company listed in this stock exchange is the Aramco. It's the largest oil company in the world, Aramco. Okay? And the third one is Tel Aviv in Israel. Then we have Turkey. Then we have Qatar, UAE Abu Dhabi, and Nasdaq Dubai. Next is Dubai. And then Egypt. Then Nigeria, Morocco. Morocco is in North Africa. Oman, Jordan, Bahrain, and Mauritius. Okay, these are the situation of markets in Middle East and Africa. You may have the questions, what are the proportional shares of global security markets? Now, we can answer this question by a pie chart. Okay, this is the pie chart. This is the global security markets. Well, America, 42%, Asia, 35%, and Europe, 20%. Middle East plus Africa, 3%. Well, this is by the end of 2018, but I believe nowadays this one and this one may be even bigger. You can go to these websites and look for the newest data and redraw the pie chart. Next topic. Okay. Next topic, we will talk about the stock market in China. And we will have 5 parts for China. So we have more detailed information in China. Okay. In terms of stock markets, Usually, the first thing we know about stock market is the stock market indexes. Stock market indexes. What have we known about stock market indexes? Probably you have known about the Shanghai Composite Index, as well as the Shenzhen Component Index. And probably you have known the Hong Kong Hang Seng Index. Probably you have known the Japan Nikkei 225, or sometimes we call 225. Also, you may have known the stock market indexes in United States of America, such as the Dow Jones Index, such as the Standard & Poor's 500 Index, such as the Nasdaq Index. Okay, these are the stock market indexes. So whenever we talk about stock market, the first thing we usually need to learn is the stock market index. Now, let's go to topic 5, the first part of stock market indexes in China. So this topic, we will talk about the CSI index series in China. Okay, let's look at this topic case. Let's have a first impression about the CSI index in China. The CSI index covers not only Shanghai stock market, but also Shenzhen stock market. So you can think the CSI index covers whole China mainland's market index. This picture demonstrates the comparison between CSI 500 versus CSI 300. The CSI 300 index is one of the most famous index in CSI index series. Okay. For this graph, let's look at this graph. These are the dates. And in this graph, we use two vertical axes. The left vertical axis we use to describe CSI 500. And we find its order of magnitude is from 6,100 to 6,800. The right side, the right vertical index we use to describe CSI 300 index. And its order of magnitude is a little bit different from the one on the left side. It's about 5,000 to 5,800 index. So the method of using two vertical indexes, we usually to compare two things with different order of magnitude. In this way, we can demonstrate more details for each of the two securities. Let's look at carefully. The blue solid lines represents for CSI 500, and the orange dot lines represents for CSI 300. Okay, so from this graph, what conclusion do we have? What are our findings? First, we must say that although the two curves looks very different from each other, actually their trends are quite similar to each other. Almost for every major turning points, they are similar to each other, right? Okay, this one not very much similar to each other, but this one, yes. This one, yes. This one, late. Okay. This one, quite similar to each other. Okay, these are quite similar to each other. So in general, their trends are similar to each other. Of course, they are still different. Okay. Let me explain later about the details of these two CSI indexes. First, let's learn what is called the stock market index. So we have a couple of keywords. First, stock market index is a relative number. So whenever we talk about relative number, we will know that there will be a benchmark or there will be a base number, right? And the number later is a relative number compared to the base number or the benchmark number. It is a stock price statistics. So a stock market index is actually a statistical number. The purpose of stock market index is to measure and reflect what? The average price level of a stock market. So first purpose, the average price level. For example, in Shanghai market currently is at 3,000 level. Okay, we know that. And previously we may have another level at about 2,000 level. So the first purpose of the stock market index is to describe the average price level of a stock market. And then the second purpose is to describe the changing trend. So usually we have three types of changing trends. First type is upward. The second type is downward. And the third type is flat, although fluctuating, but general it's flat. So these are two purposes for a stock market index. Okay. When the index rises or drops, it indicates that the average price level of a stock market rises or drops. This is the meaning of the changing trend. Also, the third purpose of a stock market index. So in some extent, it's a barometer of the social, political, and economic changes in a country or region where the market is located. So it's a reflection of the microeconomy in some extent, but sometimes not always in sync with microeconomy. Maybe earlier, maybe later. But in general, it's a barometer. Now, in the stock market of any country and region, there are lots of stock market indexes. So CSI is one of the major stock market indexes in China. Under the flag of CSI, there are also lots of stock market indexes. And the CSI 300 is the most famous one in CSI stock market indexes. It selected 300 big-sized stocks from Shanghai and Shenzhen stock exchanges. It is quite commonly used. So this way we call it is a component index. A component index means we do not use all the stocks in the market to calculate the stock index, but we select some of the best to calculate the whole market movement. You may have a question. From the whole market, we have thousands of stocks. We only select 300 best stocks among thousands of stocks to calculate the market movement. Can we reflect the whole situation of the markets? Well, it's a very good question. It depends on the calculation algorithm. Usually, literally, just by the calculation algorithm, I'd like to say it only reflects the price movement of the selected 300 big stocks. Okay. Then we have the CSI 100. So for all the stocks with a number inside, they are component index. So from this, we can see that they use the select based 100 biggest size stocks, and then CSI 200. Then they use the selected 200 stocks right after the first 100. So they usually represent the big and middle-sized stocks. And then we have CSI 500. Use selected 500 stocks right after the first 300s. And then we have selected 800. CSI 800. So we're focusing on middle-sized stocks, S&B. Okay, these are the Python commands for the picture just now. This is for CSI 300 and this is for CSI 500. Of course, we can have updated information on that by using the end date of today. Now we find a new option in this command for compare security. It's almost the same as the previous one, compare stock, but this one can also compare bonds. This one actually can also compare futures and options. Okay. What does this option mean? This option means that whenever we specify this option, we tell this Python command, please draw a picture using two vertical axes. We have two securities here. The first one use the left vertical axis, and the second one use the right vertical axis. So this is the function of this option. If we do not have this function, both securities will use the same vertical axis, which is the left vertical axis. So when do we use the default situation? We know if the two securities here, their measurements here, suppose their measurements are in similar order of magnitude, we will not need this. However, if these two securities, their measurements are in very significantly different order of magnitude, I strongly suggest you use this option. Otherwise, you may lose most of the details of the measurements in the graphics. Okay. So this is the usage of this option. Now let's do the exercise together. First, let's copy the commands to Jupyter Notebook. Copy the Jupyter Notebook. Yep. Okay, this command looks pretty long. Then we can enter it. And then we can see it clearly. Okay, we turn it into 4 lines. So these two are the securities we expect to compare. And then close is the measurement. And this is the period of date we expect to compare. Now we expect to update to this year. (2022) July. Day is 20. Now let's look at the situation. As we have updated the dates, the graphics in this picture may look different from the one we see in slides. Well, this is the newest situation now. The starting date is January this year, and the end date is today. And what we have seen in this slides, in this picture, first of all, we have seen a significant turning point here, right? We have a turning point here, we have a turning point here, right? In order for trends, we can see that here, this is our trend, okay? This is our trends. Then we may have a turning point here. And it's down, well, it's up again. It's up again. Okay, in general, from the big trend, we can find out that probably we can see, yeah, okay, a bigger trend. The bigger trend is this way, right? So it's close to May this year. So before May this year, the big trends is downward, and after that is upward. However, we are not sure about this point, whether it is a big turning point. Okay, we are not sure here as well. I'm not very sure, but by this figure, we can tell that CSI, okay, the blue solid one is CSI 500, and the orange dot one is CSI 300. So from this relatively longer period of date, we find out that although the calculation method of CSI 300 and CSI 500 are different, they are very similar to each other in terms of their trend and changes. Let's look at these curves. Although there are slight differences in different periods, but they are very similar to each other in terms of their trend and changes, right? Sometimes CSI 300 is going down in an earlier and quicker way. Okay, so they are very much similar to each other. Let's back to our slides. Okay, we have done the exercise together, right? Do we have any questions? So in previous topics, we have introduced a very important concept, which is called component index. A component index, again, let me have a quick review. A component index is a stock market index. And the feature of a component index is we do not use every stock of the market to calculate our index. We just choose one of them. Usually we choose the first 100, 200 or 300, even 500 biggest shares, the stabilist shares in the market to calculate. So a direct question might be, a component index can represent the whole market situations? Well, it depends on the calculation method or algorithm. But if we understand directly from the selected stocks, we can say that the component index, at least it can represent the price movement and price level of the selected stocks in the market. Okay, let's have a 10 minutes break. See you after the break.